for January 22nd, 2020. What? Okay. Bear with us one moment as one of the members just came in and wants to get settled. But I could ask the secretary to call the roll.
Private members, Michael Spitzer, Chair.
Present.
Larry and Angelo.
Present.
Mark Kaplan.
Present.
Bud Larson.
Present.
Representing Mayor Bill de Blasio, Raymond Lee.
Present.
Representing Comptroller Scott Stringer, Jacqueline Thompson.
Present.
We have a quorum.
Thank you. At this time, I'd like to entertain a motion to accept the draft minutes of the meeting of December 11th, 2019.
I'll make that motion.
Thank you. Okay. At this time, I'd like to turn the meeting over to the Teachers Retirement System to present their financial statements. And could you introduce everybody that's here with you, Mitch?
Right, of course. Good morning. Good to be back. Thanks for having this early, and thanks for breakfast. I'm Mitchell Fruchter, Deputy Chief Accountant. Barbara Ocharskik is the Manager of Financial Reporting, and David Yerushalmi is the Financial Reporting Accountant. So we're pleased to be back and to present to the Audit Committee a summary of the, is it on? It's on, should be on.
No, Hope. Hope.
Full. Okay. So I'm pleased to
Introduce Hope.
oh, I'm sorry. I hope everyone. Hope Goldstein and Joe Conjamalo for Mark's Paneth. Okay.
The spectators at this point.
Okay. So I'm pleased to present to the Audit Committee a summary of the teacher's fiscal year 2019 combination financials. Again, in terms of context, I like to always point out that this is the 5th year that we're doing combination financials of the QPP and TDA, and it's also the 5th year that we have the GASB 67 requirements, which expanded actuarial and financial disclosures, and it's the 4th year that we had GASB 72 investment disclosures. In terms of where we are, in terms of the net position as of June 30th, 2019, it increased 6.3%, or $58 billion, up from $54.5 billion in June 30, 2018. That's on page 4. I guess you guys are using the blue books, right? Not the CAFRA, right? It's the blue books, yeah. So it's page 4 begins the MD&A. The TDA net position also increased 5.8%. This is on page 10 as of June 30, 2019, or $35.3 billion, up from $33.3 billion from a year prior. The combined amount for the QPP and TDA can be found on financials on page 16. $93.3 billion, or 6.2% higher than $87.9 billion of the year prior. $93.3 billion is also on page 180 of the city CAFRA. In terms of investment performance, obviously investment performance can largely be explained by investment allocations to particular market sectors and the individual sector returns. So pension assets were allocated roughly 33.5% to fixed income, 32.5% to domestic equity, 21.5% to international equity, and 13% to alternative investments, including private equity, real estate, other opportunistic fixed income. Allocations in general very similar to the year prior. Just a 0.5% increase in alternative investments and decrease in fixed income, basically. In terms of returns, in general, obviously, we have basic benchmarks, Russell 3000 for stocks, that returned 9%.
Fees and
Morgan's, this is, now I'm going to like page 6, and the MD&A has, return information. So the Russell 3000 had returned 9%. Morgan Stanley Capital Index for international stocks returned only 0.02%. Real estate securities index was at 9.8%, and fixed income, which New York City uses a core plus 5 aggregate benchmark of 8.7%. So international was the outlier this past year. The other ones basically were in the 8 to 10% range. Pension fund as a whole, it's now required as part of the GASB 67. The RSI on page 56 shows 7.5% return for the pension fund, which 7.5% is higher than the expected investment return of 7%. In terms of longer periods, our CAFRA shows 10-year return to 10%, 10.01. The controller reported in their books for 15 years at 7.28%. So, I don't know. If I knew the market, I guess I'd be doing other things. But okay, in terms of current investment levels, teachers has increased roughly 5% since the beginning of this year. The S&P is up like 11% since June, but we're up. The NAV is up 5% or 4.9 billion at 98 point. We're at 98.4 billion right now, so it's a large number. In terms of current okay, so that's in current investment levels. Again, it's under 100 billion, but 98.4 is right now where we are as of December 31st, 2019. Another important measurement is obviously the plan's funding level. Funding level depends on measurement method. On page 52, Schedule 1 of the RSI shows a 79.1% funded level based on the GASB market value of assets method. More typical method, actuarial entry age, which method against normal actuarial accrued liability is 63.8% as of June 30, 2017, and we report that also in the CAFRA. In addition to that, our MD&A includes breakdown in terms of the employer, in terms of QPP and TDA cash flow, QPP and TDA holding percentages, and the percentage of funds managed by the controller versus our other investments, largely for the TDA, which are managed in-house with Chase as a custodian. That's a basic summary. In terms of the biggest items that we face, we're going through a modernization phase where we're changing our record-keeping system. I think a lot of the systems are going through that. And on an accounting side, custodial accounting, there's always specific, technical issues. I guess we're waiting to see what happens this year for, I don't know, I think that, in terms of what, I guess we just had an RFP for an auditor, and we'll see where we are next year with, on the accounting side. So that's that. I could go over the audit observations, if that makes sense. Okay, there were 5 observations. I guess you guys, I guess the audit committee, separate the handout. The first one was a loan interest rate correction. We did have to do an interest rate correction. We were charging a % higher on our QPP loans. QPP interest rate, loan interest rate is legislated by the RSSL. It's 1% less the actual return rate. The actual return rate changed in 2011, and due to whatever occurred at the time, we didn't make note of that. So basically, we had to refund a lot of checks, not for a large amount, but we've just done in the past month 26,000 refunds for 25,000 and corrected 25,000 open loans. At least, it's a positive correction. So that was the first finding, which we obviously notified the auditors that we noticed, and we had to correct that.
What was the value
Of the total difference, it's in total, it's like we accrued this, it's like 15 million or so, not a large amount in total, but just a large amount of members, impacted. So, and we still have other populations that we're going through, so it's, we're trying to get through it. Yeah.
When you send out the corrections, what happens to the recipients' tax issues?
Tax issues, well, it depends. I mean, for most of them, there is no tax issues, but some there are, and we're still working through that. Yeah, just, if it's a defaulted loan, or if the person at retirement or at resignation, had their loan closed out, then there's a 1099 issue that needs to be corrected. Yeah. But yeah, we're still. Those are obviously the smaller. For most, it's a small refund, which we tried to get out all in January. So that's where now we're going into these other defaulted loans. One of the topics which is coming up, which is more complicated, but in general, I guess it's a more it's a more complicated loan issue in general. The other items. I think number 2, Microsoft software support. Teachers is in process of replacing 50 servers still to be migrated off of, I think it's 2008 server. I think the newer versions now are 2012, 2016, and 2019. So, obviously, periodically Microsoft or any software company updates and stops to support the earlier version. So we've already done 400. We have 50 more to do. So I obviously we're finishing with those 50 servers right now. I think February. I think the support date's coming up. There's a separate one with my Windows 7 versus Windows 10, which I guess many people are probably aware of that one as well. But this is in terms of the servers. In terms of the third item was financial statement grouping. In the past, the auditor is correct in noting that our investment groupings are complex. Personally, the real issue, it has to do with the commingled fund, which I mentioned in terms of investment accounting. It's the issue of commingled funds, and then you have regulatory versus non-regulatory reporting are the two issues on the accounting area. But it has to do with commingled funds, which we have, particularly on our variable investments. We have investments. We even have investments where we have a minority share of BRRRRs in our variable. So it's just by having multiple funds commingled, it creates more. You need to take percentages and things like that, and that's what leads to more complex worksheets. We're working, we're working with our custodians to try to get past the plan accounting issues. Really, the more plan accounting you have, the more complicated your accounting is. The more you could have individual just one account and just roll that one account into a larger number, it's easier. The more you have to divide your accounts between various ownerships, it just makes it more complicated. So that's it's teachers, that's my opinion in terms of the financial grouping. It really comes down to the actual investments. The other items, and in terms of that, we're working with custodians. We're going to bring in a consultant in general about investment accounting, see, staffing, different workflows, working with custodians, all those type of things were personally of interest to see what else we can do. But I see it more as a custodian issue and how to work with your custodians and to make things easier and more efficient. Okay, number 4 is cyber insurance. Teacher is currently working with an insurance broker, Gallagher, defining coverage provisions and reviewing quotes. So we're looking to purchase cyber insurance as a, as insurance.
What's your deadline for doing that?
What's my deadline? Hopefully we'll come to a vendor very soon. It's been going on for a couple of years because we first had an RFP, and it became clear that you really need to bring in a consultant to set up the actual coverage and quotes. So we went that route. We brought in this firm Gallagher to work out the details, and so we think we're pretty close now that we have the outside help. And
I speak has been involved in one recently.
yeah,
And you're way behind the curve here in terms of doing it. And if somebody shows up, you will regret not having the insurance terribly. So I would urge you to get some temporary coverage or something, because the expense that you go through when you get a communication or some system goes down. I've just lived through this. The system goes down, you're out of business in some ways. And I think this is probably as big a risk as you have. The numbers are the numbers. But from an operating point of view, at least in my current experience, this is a significant risk to the enterprise.
yeah.
And I don't think you should, I don't think you should come here next year, and whatever it is, and say, we're still talking to a consultant.
Yeah.
Because the cost of what happens, if it happens, will be a multiple of anything you can spend anyplace.
Yeah.
And your
Appreciate
carrier, when my experience again,
Yeah.
the carrier, when the ransomware shows up, will refer you to a couple of tech firms they use to negotiate with the ransomers. It's a business cost.
Yeah, we agree. We know the people running this RFP are well aware of all those ransomware stories, and
I'm sure.
And yeah, we totally are in agreement. And hopefully, this broker, we're reviewing quotes right now. So hopefully,
I would urge you that there's nothing that can be soon enough.
Yeah. Okay. Yeah. But it's obviously a very serious problem, and I don't, what can be done and what's being done. You really hope that something very serious is being done in terms of getting after the people doing this, because I mean it's quite an amazing problem, really. But we do have. I mean, obviously, we also have backups, and hopefully, we're also. It all probably depends on the type of the attack. But it's not like, again, we have full-time people working on doing also, aside from the insurance, in terms of trying to secure up and create the right levels of deterrence and protection that we can. Okay, the 5th comment, just in terms of the pension management system, as I mentioned previously, Teachers is going through a multi-year large record-keeping system project. It's all-encompassing, and it's a lot of work, and we're making progress, but it's not fast. So we rolled out this past year, death benefit platform. So part of our processes were updated, but other platforms, we have the pension side coming next. And then the active side, like loans and just member accounts, will still to follow. So it's a large undertaking, and I think other systems are just beginning. Or I guess PERS was up first, but I guess every system is coming from a different angle and a different need. So that's ongoing.
On that topic, maybe you could pause and ask the auditors a question, because this is a perennial topic, and we've been updating these systems for a very long time, and there's observations every year about what's happening, and it's not getting done. So I guess my question is, could you give me a broad idea what you think is happening across the systems, whether what needs to be happening is happening, whether other resources need to be injected into this process, or what's going to make it stop being the perennial? We're in the process of updating our systems.
Thank you. Yes, so Hope Goldstein. So from a systems perspective, I think each individual systems owns their own processes. And I do think there's been improvement since we've been working with the systems. So even something like the mapping, and I know I just speak from an operational financial perspective, not technology, and I'm going to turn it over to Melissa to talk on the technology side, but we are seeing improvements overall, but we take each system very separately, and the question I whispered just now to my partner on the cybersecurity, we're not seeing it at the other systems, we're seeing it this system. So again, each one very separate in terms of how they own that technology. So I'm going to turn it over to Melissa, who has been working with I'll call them the CTOs of each system.
Good morning, everybody. My name is Melissa Wari. I am a certified information system auditor with Marks Paneth here. I met with the IT folks and some of the business folks trying to get an understanding. This was my first year on the account, so fresh set of eyes coming in and looking at the systems. From what I understand, looking at prior year work and the mapping, it is being a work in progress, obviously. I think that from looking at the timeline, that they are working towards meeting a 2022 goal to get this Aspen system fully implemented. There's a lot of components to it, the business requirements, the interfaces, et cetera, that really require it to take this, what seems to be a slow pace, but to get it done correctly, to make sure that there is no issues with the system once it's up and running. They're testing it properly. They're making sure as they're rolling out each module that the module is functioning as intended. So it is a very complex system in terms of the functionality. There's about 7 different modules that are getting rolled out. So it's something that can't be done in a 6-month time frame. It takes a little bit longer to get it rolled out and make sure that it's functioning and that the interfaces are being properly addressed. So that's one side of it from an application perspective. I'd like to address the cybersecurity and the cyber insurance because I think that the tone here is extremely important.
Before we leave the topic, though, I've heard that answer over and over for many years.
Okay.
And so my question is really, what resources, what initiatives need to be taken so this time it's actually going to work?
Yes, and I think it's a combination of having the folks from the business side that could appropriately test and appropriately really go through those requirements for each one of those functional modules, making sure that they're part of the requirement definition, which they have been, but making sure that they're part of, as the system is migrating from the old system to the new, that they're testing it and making sure that it's valid, that they're validating the data and the system interfaces prior to it going live. So we definitely need to make sure that we have the commitment on the business side. And from the technology side, I think that they need to, continue to put the resources set forth and maybe increase the number of folks that are working on this.
I guess that's my question. Do they have the resources and do they have the people to actually get it done this time?
From what I gather, looking at the project plans and looking at the resource allocation, it looks like this is a top priority for them. They are focusing on it. I think they got deterred a little bit with getting the Microsoft operating systems up and going because they have a lot of servers and that needed to get decommissioned and upgraded. So I think that was a separate side project to make sure from a security perspective. So now the application side, I think from looking at project plans that they do have the people and the resources allocated to meet that 2022 deadline.
Okay, I hope that happens. I've just heard this story multiple times.
Is there a date
Thank you.
associated with it?
2020, it's previous, I don't know.
I mean, originally, again, we were hoping for an earlier implementation, but I just want to make clear that, every system has different modernization. So our system is not that we have a very robust system currently. It's just that IBM notified, similar to Microsoft, about end of life issues coming up. It's not, other systems started early because their system was manual. We have a very robust system. We're trying to get the next system on par with this other system, which was a very good system, and it's a huge undertaking. So that's just in terms of our situation, which started after BERS or whatever, which had went through a real modernization from a to a real system. But so it's a different situation. Second, and I mean, in terms of people, there's a lot of people involved. It's still a huge undertaking, and we're also now being hit by other things. Like there is a DOE lawsuit that's went through the courts. It had to do with discrimination, and it's requiring us to bring in people who might have not worked or didn't work as much into our system, and that's things like that. So you could have lawsuits and other needs which need to be addressed as well. And that, for us, that's a huge issue because we have so much staff that are brought in to work on this project. And then when you're hit with another thing where things get delayed or put off because the judge doesn't really, doesn't care about your system, that, there's a lawsuit to attend to. So you have other considerations, but for us, we have it's a huge undertaking. It's a huge staffing increases, huge amounts of dealing with the project. And believe everyone working there, obviously, if we could, we'd want to, finish with it as soon as possible. It's a huge undertaking.
And that's why I'm addressing the question to the auditors, because this is happening 5 times over. They're all different. They all have a different set of problems. But I have 5 pension management systems that have not been functioning well for an exceedingly long time. And we've been going through multiple iterations of trying to update them and fix them. Each year I hear the explanation that it's getting fixed this year. What I'm really asking is, will I not hear this next year?
In terms of this, you're going to hear it next year because the timeline is 2022. So it is still going, we will look at the project plan to see that they are on course to make the 2022 timeline. Just again, from my experience working with organizations similar in size to teachers and looking at the complexity of this, it's very, very common to take multi-year to implement a system this size and this robust. But one of the things next year, we would definitely take a look at the course to make sure that we can report back to you that the resources and the timeline is still
For
going to be
this
met.
and the other 4 systems.
That's correct.
And I'm not talking because of last year. I'm talking, I've heard this story for more than a decade. Okay.
You're also saying that we're going to hear it for fiscal year 20 and 21.
Yeah. Well, at least I would like to hear in 20 that we have made this amount of progress,
Yes,
which is
that's-
going to lead me to actually reach my goal in 2021, not just a whole new time frame
Right.
with a whole new set of problems, which is what's happened repeatedly year after year.
One of the things, as I said, one of the things that we would definitely look at is the project plans and the management around that to make sure. And if next year we come in and we believe that there is a problem with the resources being allocated, that would be something that we would report. But as of this year, and looking at the timeline and looking at the resource allocation, it seems that we would be able to be comfortable with this 2022 timeline.
Okay, because that's what, and the question is, we have other IT resources in the city, do any of them need to be brought in to help this process along? Because there's a tremendous amount of skills and knowledge out there that we may not be taking advantage of sometimes.
At this time, I'd like to go back to the financial
Well, could I
statements.
ask, there are all these multiple systems. If all of these systems were merged into one system, apart from the politics of it, and then there would be one set of problems, wouldn't that be much more efficient?
Like, in terms of, the lawsuit we have, even though some of it could hit others, in general, each one, you have specifics, which will always be specific. I mean, even within teachers, you have, it's a lot of complex rules. So
I understand that, but I'm looking at this thing from the standpoint,
Central.
there's a huge pile of money sitting here, and a huge pile of people, and it's divided into 5 subsets, and that has to have a friction cost that could be, you'd have more leverage to get the problem solved if you were solving one system problem than 5.
Yes.
I know that's a huge political issue, but every year that I look at this thing, as a sometimes businessman, I said it's cuckoo.
From a
And I
centralization.
don't mind saying that publicly.
and, obviously in terms of, we could look at other rollouts that occurred, you get, whether it was the healthcare system, the Obamacare, and how that was handled. And obviously there's always someone who could do something different and better, but there are pluses. Again, I'm going to just stress one last, we
can't deal with the issue I'm raising.
Yeah, we can't do, I could just say that we have,
Yeah.
but we have, okay, when we say we had a very robust, very expensive system, what we built with very good internal, it was a combination with very good internal people. It is a very good system. It's just that, unfortunately, things come to an end of life, and moving on to the next system doesn't mean that since you have a great system, so it's just going to now take a year to get onto a new system. So that's the issue
No,
we're facing.
I'm raising a question
Yeah.
because it's above the pay grade here.
From a standpoint of, the centralization model, obviously, there's so much synergy with the IT skill sets that would support it, from a cost efficiency of just the maintenance, all those types of things. But again, that's just such a big issue, how you would take a look at it and coordinate, across
Well, it
the
goes
5
beyond
systems.
the IT because
Yes, it's a
You're
business
asking
issue.
a philosophical question that we can't address right now.
Well,
We could ask the question.
some point, I would like to have a conversation about that at the audit committee level.
Well, and
Okay.
there's a split topic between technology and programmatic decisions and operations and boards and something. I would never suggest that we should have one board, merge everybody together, run things separately. But IT and data processing frequently can be merged into a central process,
correct.
which is much more efficient and meet the needs of those multiple communities. I think we beat it enough for now.
Yes.
In addition, the end result would be cheaper.
Oh, yeah, it would be cheaper and more efficient.
Okay.
I'd like to go back to the financials. Mark, you had mentioned you had some questions.
I have some questions about it, if you'll bear with me. Some of the questions I put on other pages. You say on page 7 that they're pooled with these things for investment purposes only.
Yeah.
There's one pool of assets that are managed, and the allocation is done from that pool? Is that what you're saying?
Allocation.
When you say
I mean,
it's pooled for investment purposes only, what am I to understand that means?
I mean, technically speaking, it's more, we have a QPP plan and a TDA plan, and the law, the IRS guidelines in terms of managing a TDA deferred comp plan with the pension plan is that you can only leverage the investments. So it's funny, we were just talking about leveraging and moving things together. So the guidelines there is just specifically for investment purposes, you could invest money together, that's allowed. But you're not allowed to, let's say, write a check together and say, here's $1,000 for your QPP and TDA and things like that. So it's specific to that.
So what that gives you is better buying power.
Yes, and buying power, efficiencies with the custodian.
Okay,
Yeah.
that's what you mean, okay. Bear with me a minute. Oh, I noticed in your funds, in page 16, you have some of these funds, which in terms of the value that you have altogether, are almost $224,000, $900,000. Isn't the cost of dealing with that sort of thing disproportionate? And why would you have anything that small in this sort of system?
Right. So the 224 is a short term. It's part of this. We have this for the TDA in general. We have these other investment plans. So this is inflation protection, which funny. It's 70 million. We're actually closing this fund and creating 2 new funds. We just opened up 2 new funds a month ago, and we're closing this one in June, not in April. But it's 70 million for this fund. It's the short term, which is 224,000. But it's a specific fund which we offer, just like deferred comp offers funds in terms of.
The only reason I ask
Yeah.
is, having run one thing
Yeah.
once, the idea of having such a small thing in billions doesn't make sense. The cost of dealing with it is the same as dealing with $1 billion piece.
The way we do the smaller funds are more like it's a mutual fund. We just piggyback off of we call it Fidelity and say we want to invest into one of your mutual funds. So the costs are less for the smaller fund.
I made the point.
Yeah.
Then when you switch over, please, to page 31, you have, I couldn't understand how this was going to work. You have a column that's common, passive, active, defensive, common stock, and then you have international investments. And you have a big pile of money in there. So you don't break that down into the 3 categories?
No. The 20% international, it's all active investments.
Well, I only point out that
yeah.
above you define passive, active, and defensive. And
Yeah.
here, you don't tell anybody what you consider here.
Yeah.
My guess is probably is all active,
Correct. Yeah, I agree.
but
Thank
that's
you.
something to look at. Then, I couldn't understand, when I get down to international investments, 100%.
Yeah, so this is in terms of these funds, these variable, which we
No,
call.
but it's
yeah.
100% of what?
Meaning that there's no, it's not like a diversified fund where we're,
Well, if you look at the above it, what you're doing is you're taking 100% and breaking it down into various categories.
right.
Fixed income and equity. Here, international investments, 100% of what?
Of
All
the
international?
Fund, all international.
Well, but
Sorry. It's not a, it's not
You
a
don't break it
joint-
down into those other categories.
Yeah, it's-
But when you look at the amount of money you have invested in that,
Right.
not showing the categories may be not,
Like you said, it's what is it?
it all
a couple
depends on how
$100
much
million.
information you want to give a reader.
Yeah, in general, and I guess it's discussed more in the CAFRA, the sectors, the funds target different sectors by definition. It's just the diversified equity, which is diversified, so it's going to have more of a breakdown. Yeah, it's really, on page 30, right, you have the pension fund allocation. It has a whole different meaning. But this is just, in terms of the funds, they're all basically
I'm
designed
trying
that way.
to, if I read this thing, you're not conveying an appropriate amount of information to somebody who reads financial statements here.
Yeah.
Because you have a chunk of money, which by any standards is a big chunk of money, in international, and you don't break it down into what you're looking for there. And I presume it's all going to be, I would be surprised if it was anything but active.
Right, for international, yeah. In terms of active, in terms of that point, I agree, we should put in whether it's active or not. In terms of the allocations, I'll have to look at.
Okay. And then, when you talk about the custodians, you say it's essentially all securities. Okay, custodians, you use them for foreign stuff as well?
Yes.
Okay. And one thing I found interesting in your, on page 36, and this struck me, because I look at everything you're in, you have an investment in Israeli shekels, and none of the other funds have anything in Israeli paper.
Okay.
That's not your issue, but it just struck me. And when I compare the Israeli economy to the Egyptian pound and a few of these other odds and ends above it, it's odd. You're in better shape than the others in that respect, but I look at some of the things that I would never want to own, the Chilean peso. So
Yeah.
I'm happy to see a more stable currency here than the other
Stable.
funds.
All right, it's all disclosure.
I understand. I'm
yeah.
getting to the substance here. You're all right, but
Okay. Fine.
I'm a little, to manage a portfolio which consists of some of these economies that are in deep trouble is problematic in my mind. But that comes from somebody who used to do that sort of thing. And it's not only you, it's the other funds too. Oh, and here's one of my, if you please, I'm sorry to do this to you, but page 41, you show level 2 for U.S. Treasuries and U.S. government debt. That's unusual. You can go out and execute orders instantaneously in those markets as fast as you can for a listed stock. And I've seen that carried as level 1. I mean, the credit's you still better credit, and the markets are enormously liquid.
It's an issue of liquidity in general levels, you know, or.
Well, I just
but I
want to
believe
point
that
out,
we'll have to look at that. I believe it's
You can
all.
do better if you look at U.S.
No.
Treasury bills. You can execute an order in the Treasury bills, I think, as fast as you can for domestic
Well,
equity.
is it really as fast?
Oh,
I
yeah,
don't
you
know.
can pick up the phone, you talk to a dealer, and you have it done like that.
If you had $5 billion in yeah,
Like that.
I don't know.
And
I
not
mean,
only
I
that,
get-
if you're talking about trying to execute a $5 billion offer in a stock on the New York Stock Exchange, might take you a little while.
We could review with the auditors in terms of that, but in general,
Forgive me,
it's
I used to have
level
run
1 and
a
level
US
2 is generally
a US
stocks and
government
bonds.
bond dealer.
But I believe here liquidity is not the measurement of level 1 and 2 and 3. Is how the fair value is being valued using the price quotes in the active.
You can get that quote, you go online, and there are, I don't know how many U.S. bond dealers there are. There are lots of them.
And they have to be identical in order to be, quoted as level 1. Level 2 is different situation.
Well, if I were the United States government, I wouldn't like to be called level 2.
Then
Now, sorry, Mike, but you asked me. The rate of return on page 40, it says a money-weighted rate of return. What's a money-weighted rate of return? I'm just not familiar with that.
40.
Put the gold on a pan and weigh it?
It's in terms, there are different formulas for, you know, compounding investment, you know, performance. I don't.
I didn't understand how I would do it, figure out what it was. The rate of return is 7.5%. I understand that. How do you use money to weight it?
Again, it's an investment. You could. It's a term in terms of the formula for doing the performance return. I don't recall which ones compound. You know, how it's compounded differently than, let's say, compounded return.
Oh, all right, it's one I didn't know. Listen, after beating up a little bit, your statement here about what you're doing with your systems is far better than a number of the other funds. So, you may be ahead of them, which is good. I'm done.
Anybody else have any questions? Thank you for coming, and good luck.
Okay.
In the one I had recently, some employee of the company pushed the wrong button, and the next thing you know, we were shut down for a week and we had to pay ransom. Just shows how just one thing.
Yeah,
is.
next up on the agenda is BERS, the Board of Education Retirement System.
You have to. Not only that, they'll tell you how to fix it. You know, but the problem is, it's not so much the systems, it's at least the one I was, one person did the wrong thing, and that was the end of it. So, no matter how much training you give these kids, well, we get tested every 3 months, and almost nobody scores 100%.
Good morning. Could you please introduce yourselves with the auditors?
Which one is this, Mike?
Burrs.
Burrs. Where is Burrs? Fire,
Good morning.
Board of Education.
My name is Jean-Daniel Desmond, and I'm the Chief Financial Officer at BURS. I'm accompanied by Chitra Subramanian. She's the Deputy Director. And I'm also accompanied by Ade Ezefili. She is the Internal Auditor at BURS.
And Hope Goldstein.
And Hope Goldstein.
Let me start with a brief summary of what happened during the year. And, BURS net position increased 7.24% from 2018 to 7.11 billion for the QPP. The increase for the QPP was 6.83, and the TDA increased by 8.06%. Investment increased also from 6.97 billion to 7.45 billion in 2019. That's a 6.83 increase. The return on investment also increased by 6% in the fixed investment and 7% in the variable investment. We also saw an increase in member contribution by 13%, and membership also continued to grow from 51,000 members to 53,000 members. The composition of the membership is 30,000 active and 18,000 retirees. Our funding ratio is from 2017 lag numbers is at 69.3%. In a nutshell, this is the key numbers for the fiscal year 2019.
Are there any questions regarding the financial statements? Before we go to the management letter?
Same sort of thing I raised before the others.
As people are looking, let's go on to the management letter. One of the, like if you heard before, like cyber security insurance, do you have that?
No, not yet. We don't. We don't have cybersecurity insurance right now. And from the last conversation I had with the IT director, this is something BURS is in a bubble within DI IT, in DOE. So everything that is related to cybersecurity has to be taken not only just uniquely by BURS, but in conjunction with the DOE. And I know that the director told me that he's in contact with DOE permanently, and then that's something they are trying to get into.
It occurs to me that essentially what this is the city is self-insured against cyber risk. And the question is whether this is a citywide issue that should be looked at way up high and decide whether the city wants to, in effect, self-insure or not. And I can imagine the premium would be astronomical if the city decided to do it. But if you do it in pieces, each of these organizations buy cybersecurity, it's going to be much less efficient than buying them in the aggregate. And I suspect that number is going to be disturbingly large. So there's a real policy issue here, it seems to me, as to whether, I mean, if this was a business, each division would not have its own cybersecurity policy. The parent would have it for everybody. And do we think that this committee ought to recommend, whether we can do it or not, I don't know, that somebody at the city ought to look at this, instead of having 5 different policies, for example, coming out of today, to have one. I'm sure it would be more efficient, and you get the same consultant to look at it all, and you get the same, you negotiate with the carrier, and you do better.
Mark, you jogged my memory, because I could have sworn we had this conversation with the public advocate a couple of years ago, and that was something that was being discussed.
Well, being discussed is,
I-
my colleagues is pointing out, doesn't get it done.
Doesn't get it done,
And here is
right.
real money.
Yeah. But I do recall from a public advocate that was spoken about, and that project.
Well, you and I are in the same
Yes.
place, aren't we?
Yep.
I don't know whose representative on this committee could have that looked at from a policy point of view, make a business judgment, but that's one place where you can, if you need it and you buy it atomistically, you're going to spend a lot more than if you buy it on the aggregate. And buying it from 5 different consultants is not the way to do it.
Would it make sense to direct that question to
Question.
the city's chief information officer?
Correct.
So maybe the audit committee
We-
reaches out to the chief information officer and ask if somewhere in the city that's being addressed,
Well, for those of you
whether or
in the
not he's
city,
doing it, he should know.
I only look at different point of view. I just think it's something that,
We should follow up on
if we
that.
can provoke that conversation, we may finally have some impact someplace financially.
Okay, anybody have any comments or questions?
I got one on the financial statements,
Okay,
Mike.
Page,
Page 24.
Doesn't
As
mean we shouldn't
deposits
ask
are
him.
exposed to custodial credit, they are uninsured, uncollateralized. And later on, it says that cash deposits are collateralized, are insured FDIC or collateralized. So, and it's the first sentence in the paragraph and the last sentence. And then I say, because it says, it's risk that in the event of failure of the counterparty, the system will not be able to recover the value of its investments. And then we say it's all collateralized, so it's nice. I couldn't understand why it's, but then if systems invest in commingled funds, the assets with the fund are held by in the name of the trustee. And my recollection too is when on the stock loan business, the city got into trouble when the proceeds of the loan were reinvested in some security, and that security went to hell. Is that kind of investment still possible? I couldn't figure that out. So if you have billions of dollars worth of loans, you take that collateral, you borrow against that collateral, and you buy a security.
So
If you buy government bonds, you're all right.
So currently, we're taking no credit risk with reinvestment, so
So you
the
don't do any of that
situation
stuff.
but we, so unless the U.S. government goes under, we should be fine.
We'll wait till the election.
That might be a problem.
Okay. I just think it's and I made this point earlier when I looked at the list of securities that in the currencies that you're in, and there's some currencies that you may have to do it for balance or something. But notable of the other 4, other than the one we just talked to, there are no Israeli currencies in this thing. And that's a far better currency
then the Moroccan dirham, the Egyptian pound. Oh, it's the shekel is here, I apologize. But some of the currencies you have in, maybe you had it for diversity, but it's hard put to figure out why anybody would own some of those currencies.
So in general, they all have diversified portfolios. They're buying what's in the index, so every currency you see here is in the MSCI index. It's not a specific decision to buy that country and expose yourself to that country. It's because they're benchmarked against a broad index, and they're buying all the securities in that index. So that's why you're seeing what you're seeing.
Okay. Because you wouldn't want to own some of these if you had it on your own portfolio.
And they don't own the underlying currency. They own the security that's issued.
I understand that, but
against
that's
the
the risk.
currency.
You have two
Yeah, it's
risks.
still a
The
risk,
security risk
but-
and the currency risk.
But it's
Okay.
a function of diversification.
Okay. All right, Mike, I'm done with that.
Are there any other questions regarding the management letter?
No, it's the same question about the
If there are none, thank you for coming.
Thank you.
Next up on the agenda is the New York City Employees Retirement System. But, like, before you begin, I would just like to recognize other people that are in the room that are here in a consulting practice. One is David Jetta, the Assistant Controller. Another is Sherry Chan, the city's Chief Actuary. And Cosmo and Marla, the city's auditors. Thank you.
Which one are we doing now?
New York City Employees Retirement
Here it is, the big top one. Thanks. How can you remember all the names, Mike?
Thanks. Could you please introduce yourselves?
Sure.
Who's here from NICES, as well as your auditors?
Good morning. Cheng Gang, the Associate Director of Finance. Accompanying me today are Tom Cambaras, our Chief Information Officer, and Herman Bernal, our Director of Internal Audit. Mark Spaneth, our NICER's independent auditors. Can everybody hear me? Is it clear? Okay, great.
Yes.
So I'm here to present NICER's financials for June 30, 2019. QPP net position as of June 30, 2019 reached 68.5 billion, up from 65.2 billion in June 30, 2018. CAFR shows VSF net position as of June 30, 2019 at 416 million, up from 402 million in June 30, 2018. The QPP and VSF combined is 68.9 billion, an increase of 3 billion from 2018. The increase in combined net position was mainly due to favorable performance on the investment portfolio, primarily in the equity markets. The total pension fund returned 7.13% for fiscal year 2019, slightly lower than NICER's policy benchmark of 7.73%. The total fixed income segment, which takes about more than a third of the portfolio, returned 7.21%. Domestic equities, which account for more than a quarter of the total portfolio, returned 8.37%, slightly lower than the Russell 3000 index of 8.98%. Total world, excluding USA, makes up about 13% of the total portfolio, returned 0.57%. Now let's talk about funded status. You will find the plan's funded ratio on page 15, as well as in the actuarial section of the CAFA. Based on the entry age actuarial cost method, funded ratio is at 72.2% as of June 30, 2017, which is the date of the most recent actuarial valuation. Note that the funded ratio went up from 71.4% as of June 30, 2016. Additionally, as of June 30, 2019, the plan fiduciary net position as a percentage of the total pension liability remains at 78.8%, same level as of June 30, 2018. For NISERS and the 5 ESFs. Now, speaking of ESFs, the QPP transferred to 4 out of the 5 ESFs approximately $4.6 million in benefit payments. Just to refresh your memory, these are the smaller VSFs, including the housing police superior officers, transit police, and transit police superior officers, and they are funded on a pay-as-you-go basis. NISERS transfers in December of each year from the contingent reserve fund to those VSFs in order to cover the benefit payments. Now, since these funds are closed to new entrants, the benefit payments are expected to go down each year. Based on the actuary's estimate, as of June 30, 2019, a SCIM is payable to the correction officer's VSF in the amount of $75 million. In December, NISERS transferred 90% of the estimate, which is $67 million, from QPP to COVSF. As a reminder, starting in calendar year 2019, these $12,000 a year payments are guaranteed by law. Now, this concludes my speech for today.
Does anybody have any questions regarding the financial statements?
No, they're pretty straightforward.
Sorry, Mike.
Oh, don't be sorry.
Took a lot of reading this weekend. Do you ever measure your performance against the other fund's performance? Both in terms of the absolute performance and the expense ratios?
Yes. So we have participated the CEM survey, if that's what you're talking about in terms of.
I don't know what the CEM survey is. All I'm looking at is there are 5 funds here. Each one has money. Each one has expenses. Do you compare your expenses and your return on investment to the other 4 funds?
Not at NISERS, but I'm going to defer that question to Controller's Office to see if they have done anything like that.
You know, so yeah, we do compare them. They all have different asset allocations, so there's a different expected return for each. As far as expenses, we haven't, we do that for investment expense, but not the overall expense of the fund.
I'm going to suggest that it's a perfect example of 5 things doing the same sort of thing for 5 components of the city with probably different expense ratios and different performance ratios. And it seems to me that somebody ought to be looking at those to see whether there's any substantial discrepancy, to see whether you reduce the costs or enhance the performance. I don't know how the rest of you feel, but it sure as heck if I were running this thing, I'd have that done. Now, I know the audit committee can't make that happen, but it seems to me that you ought to want to know that.
So
I mean, if one of them
Jackie,
sticks out like a sore thumb, certainly you would want to know that.
So I think the audit committee could recommend that happen. And
Well, let me put it this way. I look at my fellow members. I, for one, would like to see that number. I started to do it. It's too much. I mean, I'm not going to do that with a pencil and paper, but you could put a program in place and you could have this spit out on a regular basis. And then you could have, you can look at that. I can tell you that when we did this thing for the Board of Ed when it was separate, I used to get performance things, and I remember one of the principals said to me, I haven't had such lousy grades ever in my life, and next year he came with better grades. I think it's something you ought to look at.
okay.
Now, so that's one. Then, on the page 4, there's a very substantial fluctuation of cash and cash equivalents year on year. It just looks, I'm just curious about how it goes from 172 million to 21 million up to 73 million. What causes that fluctuation?
For this question, I will have to get back to you on that.
I'm sure it's okay, but it sticks out.
Yeah, because it's prepared by our accounting department, so I'll have to investigate and get back to you.
Okay. And then.
When you respond, could you please respond to the secretary?
Okay.
And
he'll distribute it to all the members.
It's not
now,
that big of a
I
change
looked
when
at
you
the
look at the
investment
base
expenses.
investments.
It's
What you'd have
$240
is cash
million.
reserves.
Is that right?
No.
It's on page
In the middle
6. It's
trades.
$240 million of investment expense. Now, what's in that? The cost of execution, or how does a number like that, what gets paid to get to that number?
Sean, do you want me to,
You wanna go ahead?
Okay,
Yeah, go
we can
ahead.
chime in. So that's all investment manager expenses, that's consultants, that's all the investment expense of third parties. Probably does not include brokerage expense.
Okay.
Did that answer you?
Yeah. Then, if you don't mind going to page 8, I see in one case, the Treasury inflation protected is 2.3 billion. And then I get down to below that, Treasury inflation protected securities is a bunch of money. What's the difference? And why are they two places?
For this question, again, I'm going to defer to the controller's office to answer that.
So Mark, the top is in separately managed funds. The bottom are in what we call collected trust funds, which just mean that the 5 systems are part of a overall trust where we're allocating the amount to each system.
You might, as a reader, I like to know how much you have in each category of investments. And in order to do that, I have to add the two numbers, and I wasn't sure whether that was an appropriate addition. You might want to look at that.
Okay, so we'll talk to the systems. We just want them to be consistent amongst each
Okay.
other.
Oh. If you don't mind, please turn to page 15. I got lost in boards. It says 2 members of the association designated by the board, and again, designated by the board. Is that the board designates these people? This board or the board of the organization that's doing the designation? I wasn't sure which board you were talking about.
I'm sorry, can you point to where it is located at?
Page 15, boards and trustees. There's a couple of references to boards. I'm not sure.
Transit police, there's 2 members.
You just ought to look at that, whether it's clear about who's doing what.
Mark, where are you in the?
Take the boards of trustees. About-
Yeah, I'm on page 15. Are you in the
15
bottom of the
P or the
paragraph?
variables?
Yeah, is it in the,
Yeah, I'm there.
There's two boards. I'm not clear from that which board you're talking about. Is it the board of the,
So the main board nicers.
well, take a look at that. I mean,
Okay,
if ever-
we'll get back. We'll get in. Yeah, it's the main board designating to the VSS, but
All right,
they'll get
all
an
right.
answer.
I'm not going to bother you with style. You can decide to do that later. but- Now,
I guess they're not really that.
Different boards, different board meetings, different reps.
So we have to get them the language.
if you please turn to page 24.
He's asking what the sound
In the investment valuations,
That's probably how to think of it, but it's not what's happening.
Investments are reported at fair value, securities purchased, okay, I understand that. Fair value is defined at closing market last trading day of the portfolio. Yeah, I had trouble with this, but it's all right. Yeah, and you get back to page 28, 26, you'll see there are a whole bunch of boards that you can look at that. And then you have concentration. I think the United States government's an entity. And you sure as heck have more than 5% in government bonds of one kind or another.
Mark, GASB, I believe, at least it's similar to OPEB, does not require you to report the concentrations over 5% for the U.S. government entities.
No, but if you read this, it says it doesn't have any investments in any one entity that represent 5% more than the net positions. That's a flat-out wrong statement. I don't care what GASB says.
Yeah, so we can clarify.
You should
the
clarify
GASB.
that.
Yeah, we can clarify what's that.
Now, explain to me what the plausible risk of loss means. As this thing, it's at page 26. I know risk of loss, but what makes it plausible? Take a look at that. I'm not familiar with that kind of language. Either it's a risk of loss or it isn't. Boy, wouldn't it be fun to have invested in Brazilian real currency last year? And if you turn to page 34, I know what the account's going to tell me, but I have to ask. You've got two captions on the left that are total blanks, three of them. They're total blanks across the period. So why do you have blanks? Is that somehow it's required?
No, it's
No.
never.
What?
It's a never.
I know whether it's not or not. And then, if you don't mind, if you turn over to page 36, there's something here, again, it must be something accountants understand, I don't. Oh, are all your investments, private investments, run by a partnership, or are some of them run by agreements? Because you refer to the general partner valuing things, and I do some work in this area as a lawyer, and there are lots of management companies which are not run as general partnerships. They have other methodologies, offshore funds, for example, or offshore funds run as a corporation. So I suspect if you went through it, you might find that the idea that the general partner is going to do it all won't work if you don't have a general partner you're investing in.
So all of our current investments or partnerships, but we'll get back to you.
I'm going to guess that some of them aren't.
Yeah, I don't believe we're in any offshores, but we'll check.
Well,
They're all separate agreements.
no,
with
I understand it, but
general
many of them are
partners.
run by something that's not a general partner. Take a look. And then, oh, there's a reference on page 36. Maybe somebody knows what that is. The next to last paragraph, the third from the bottom paragraph refers to paragraph, blah, blah, blah. What paragraph of what? It sounds like some arcane thing of the Internal Revenue Code. I don't know what it is.
That's The reference to 820, 1054, it's the FASB codification.
It's an ASC reference.
That used to be FASB 157.
Well, you better tell somebody what it is you're referring to.
Yeah.
Is it in
It's
there?
accounting standards codification is.
No,
the-
I'm willing to buy that, but don't you think you ought to say what it refers
Yes.
to? And then, I love this, the hypothetical fixed income security earnings. Again, it's something that wasn't in the business. What is that, please?
Skim.
Huh?
The skim.
You want to try?
That's actually a defined term to calculate the amount to move the amount of earnings that the QPP earns above that amount to move over to the VSFs.
So, well,
This is
no,
definition of the skim.
okay, well, you might want to put something in here that tells the uneducated reader what you're talking about.
That term is defined right before it.
Is it defined right before it? I apologize. Yield comparable to that available for fixed income securities.
Let's go back.
All kinds of fixed income securities? Rated securities? What? I mean, that's a huge universe to try to figure that one out, unless you narrow it.
Securities in the portfolio.
I leave you with that. And again, Mike, I read this damn thing. The last page says that according to GASB, no such information was not readily available. How does GASB determine whether information is available? I think I'm getting what I think I understand maybe what you're getting at. But GASB doesn't tell you whether information is available or not. It tells you what you do with it.
No, it
Mark, I think-
requires 10 years. So this is basically saying that the information prior to
2014 was
is not available.
Yeah, yeah, but that's not what it says.
No, it's saying in accordance with GASB. So GASB has an allowance for not having to report the full 10 years if you don't have that information readily available.
I know what it is, but it isn't saying it. Forgive me.
This kind of is what it's saying.
I'm getting tired of doing it.
If there are no other questions on the financials, are there any questions on the management letter?
You get missing a word here, but I'll give you this marked up. Sounds like you got a search.
If there are no other questions on the management letter or the financials, I'd like to thank you for coming this morning.
Thank you.
Thank you.
It was great fun reading this stuff.
Considering what I understand is a big football weekend.
It was, I had this to read, and I also had one you're not involved with, the Institute of International Education, that thick.
Next up on the agenda is the New York City Police Pension Funds.
Police pension funds, here we go.
Good morning. Could you please introduce yourselves with your auditors? Good
morning.
See, hopes they win the award for most.
You know, when we're interchangeable, Joe and I, but he's specific for these different systems. So I keep moving the mic over to him.
It keeps on moving it back to you.
It's called passing the mic instead of passing the buck.
That's what true partnership is all about.
Good morning, everyone. It's a pleasure for me to present in front of the New York City Audit Committee again. My name is Stanley Thomas. I'm the Chief Fiscal Officer for the fund. I'm accompanied by our Director of Accounting, Bavakuti Sunny, and our Chief Information Officer, John Flynn, as well as Hope and Joe of our auditors. The fund's net position restricted for benefits increased by $2.4 billion, or 5.6%, to $44.9 billion in fiscal year 2019 compared to fiscal year 2018, and increased by $3.4 billion, or 9%, to $42.6 billion in fiscal year 18 compared to 17. The fund's net position restricted for benefits increased in fiscal year 2019 and 18 due to an increase in assets, mainly related to the growth of our investments and the overall economy. During fiscal year 2019, member contributions increased by 4.1% to $278 million as compared to fiscal year 2018 contributions of $267 million. This change was due to the members increasing their deductions towards the plans. Benefit payments and withdrawals were $3.28 billion due to an increase in the number of retirees. In fiscal 2019, the administration expenses were $29 million due to slight increases in operational expenses and expenses related to our COPS 2.0 project. Fiscal 2019 was a very exciting and productive year for our fund because we completed rollout number 1 for our COPS 2.0 project. We rolled out a member self-service portal where the members could view limited information about their account. They could upload documents there and also contact directly to members of our call center at our fund. Another important event that occurred in fiscal 2019 was that the fund continued to improve overall fund procedures such as financial reporting, IT, and workflows related to the audit to ensure a more seamless and efficient process. At the end of, as you guys all know, at the end of fiscal 2018, we had 10 outstanding audit recommendations. And I'm proud to say at the end of 2019 fiscal year, we only had 3 outstanding recommendations provided to us by Mark Paneth. And 2 of the 3 is mainly relying for our project to be ended. That's the only reason why it would be outstanding. But we did, management took it as a special focus to make sure that we addressed all the recommendations as to the best of our abilities in fiscal 19. Overall, 2019 was an important year for the pension fund. Our total net position increased. We completed a rollout of our project, COPS 2.0 project, and continued to build our great working relationship with the Comptroller's Office, the Actuary's Office, and the audit team from Marks Paneth. So a special thanks to all 3 of them for making the audit process seamless. Thank you.
All right. Here's a few questions. First of all, I write prospectuses. So I would never say in a prospectus that says, as you do on page 4, that your results were mainly related to growth in our investments. That's true. And overall national economy. Because sometimes there's not a necessarily connect between what the economy does and what the stock market does.
Noted. Okay.
So you might think about that language the next time around. But there
Sure.
are other things I have to raise with you. If you go to page 8, you say that all investments are managed by registered investment advisors. In the private equity business, some of those people are not registered as investment advisors. Are all of yours everybody who's managing public securities has to become an investment advisor. But some, I don't know whether you have looked at each of the managers of your private equities to see whether they are registered investment advisors. Not all of them. Some of the smaller ones don't, for sure. So have you actually checked that out?
Probably,
could defer.
I'll pass that over to David.
You're correct. There are some smaller managers that are not, so we can help them correct that language.
Okay.
We've made the change for the city.
I got little bits and pieces here, but that's, give me. If you go to page 14, I mean, you have something called other interactives. And that says represents number actively employed. So how can it be other inactive if it says it represents actively employed people in the footnote? What are you saying? You see?
No, the,
For 14?
in the middle of the page, that footnote for other inactives says members who are no longer on payroll.
Yeah, but go to the one down, the double
Right.
asterisk.
These are active members who we project will eventually be eligible for VSF benefits.
Well,
So the footnote says represents the number of actively employed police superior officers and police officers respectively. That's what that is.
yeah, but if you go down to the second category, it says active members, double asterisk.
Right.
And it says represent a number actively employed. Okay, stand corrected. I raised the GP issue. Now, well, let's get over to page 19. The custodian is to indemnify the funds for what? I'm sure they don't have something that says we indemnify for everything. I suspect what it is if they deploy the assets which they borrow against
Yes.
to make investments, they indemnify you against the consequences of that.
We can expand
But it isn't
clarify.
clear.
Okay.
And then you say the weighted average maturity is 50 of what?
It's for the cash collateral, right?
Yeah, it's just the reinvestment of the class collateral.
Okay, well, you may want to look at that. Oh, I'm not going to buy with a singular and plurals. Uh-oh. And the same comment I make every time, when if you go to page 23, you got 3 lines of blanks. Doesn't look good. And then on 22, you say all of the funds deposits are insured FDIC good and collateralized. I suspect if you have an FDIC guarantee, you don't have any collateralization. It should be an or, no? And then if you go above that, it says that the investment security is exposed to custodial credit risk if the security is uninsured. It's not the securities that are uninsured, it's the custodial credit risk is the credit risk of the, I don't know what.
Isn't that the standard language?
Because if they, that's not quite right.
I'll look into the wording and I'll make sure I update that.
It's just not right. Now, this is one I have all over the place, but I never get much traction with it. One of the elements of currency risk is if you invest in a U.S. company, which is U.S. domiciled, but has major assets in foreign currencies, you run a risk as an investor if that particular currency goes to hell. Now, that's never part of this. But when you analyze a portfolio, sometimes you look at, if you can, to see whether or not the U.S. company is effectively a foreign currency risk. I don't know how we address that here. I know when I was in the business, it's something I used to worry about.
So we do look at that, but we use classifications that are somewhat industry standard. So if that company does not have enough revenue to be considered a foreign company, we're going to look at it as a U.S. company. But we do look through.
Okay.
To the point you're bringing up.
Then if you will turn to page 27, there are 3 different funds with radically different rates of return. Was that, the investment policy was calculated to produce that? Or was that something you was, it just, it looks odd. Is there an explanation?
I could look into that and get more details behind
It just
it.
seems to me if you have the same bottom up, same people, it's, okay, you want to look at that. And I did refer to the fact that I cannot imagine the United States government being happy at being a level 2 security, but what the heck. And the general partnership, I said that one's out. Oh, yeah. Do you ever look at comparing your operating expenses and performance to the other funds?
We don't, but we don't look at the other systems' operating expenses.
Why wouldn't you? And wouldn't you be interested, I mean, if you were considerably more expensive than one of the other funds, wouldn't you try to look at that to see how that fund managed itself differently than you, or vice versa? If you're the best managed one, wouldn't everybody try to copy you?
Sure, I'll be more than happy.
I don't think it's an individual fund, but I think this is a city issue.
Yeah.
Now, this is the one that always, the member loans, they're 4% loans. I like to borrow money so cheaply. Mike, I think I'm done with this one.
Are there any other questions regarding the financials? If not, let's turn to the management letter. We're back to the cyber insurance. Oh, no, that's the wrong one.
Yeah, you're right, it's the same thing. Same thing.
Because they're also inconsistent. Some of the systems had it, some didn't.
So with our system, we had conversations with teachers, and we were aware that they were in the process of putting out RFP, and our plan was to have a discussion with them to see what they learned from it, and then join them with that process. I mean, I could pass along to Mr. John Flynn. He could probably give you a better understanding on that process, but that was our game plan per se.
So we have met with, excuse me, we have met with teachers to discuss their procurement process, the pros and cons of the way they address their cyber insurance. But at this point, we're waiting for them to have a successful procurement, and then our plan is to put out an RFP to secure cyber insurance as well, but on the backs of what they learn going through the process, because it's somewhat complicated and not necessarily an easy process to go through.
You don't think you could buy it more cheaply if you joined in their process, instead of waiting till it's done and then going through it again?
We've talked about that. My understanding of the insurance area is that it's very complicated and based on your internal systems. So it's not that you're securing an additional 3 servers. It's far more than that from an infrastructure standpoint, from cybersecurity readiness standpoint, what kind of training you do within your own organization. It's already complex enough to try to do it with multi-agencies. Our feedback was that that's not something that would be easy to do, as much as we would like just to leverage the work that they went through to develop their RFP. That's where we feel like we can save the redundant pitfalls that they went through.
Good answer.
Does anybody have any other questions regarding the management letter? If there are none, thank you for coming this
I'm
morning.
just gonna get a drink of water.
Thank you.
You want one, Mike? You want to get one? No, I can get. I'll take one. I'll get you one. Hot water or cold? Scotch.
Next up on the agenda is the fire department's pension plan.
Okay.
Just bear with us. We're going to just hold off for about 2 minutes as people go get water or what.
You have to push it, right? Make it louder or less. Hey, get her over here. Why is she over there? She's supposed to be with us. The hot seats. Hey. Get on the hot seat. Oh, tease it, tease it. There is no more seats, so.
Today's exec session discussing the RFP. That might go a little longer. It's gonna be a long meeting. I got 3 phone calls from the head of the company that was hit. I'm on the board of a company that we just paid a bunch of money to settle it.
Not good.
Mike, no charge for the service.
Thank you.
No carrying charge?
High priced.
Yeah, we did. Harry was very helpful, telling us how to set it. We got a 2-minute break. All right. One of my best friends died 2 days ago, and I hope I don't have to be at their funeral. Listen, get a hold of Jared and tell him I'm sorry I'm ignoring him. I'll be out of this meeting in an hour and I'll call him. And what did Pat Sarvin want, you know? All right, call her back somehow and tell her that I'm in the middle of an audit committee meeting. As soon as I'm done here, I'll call her. Okay? Thanks. Mike, the guy who's the CEO of the company that I'm on the board of that got hit, he's called me 4 times while we're sitting here.
When did they get hit?
Somebody pushed the wrong button and the system shut down. It's an internet company. We're out of business for a week. It cost us a huge amount of money. The insurance company paid most of it. Apparently, they advise you to settle. FBI sort of winks and nods and tells you the same thing.
It's a new way to rob banks.
Well, what I like to say is if you rob a bank, maybe you get $100,000 in cash and they come after you with guns, and if you get caught, you go to a bad jail. If you steal a white-collar crime, you go to a white-collar prison and nobody shoots at you. It's a much better business.
Yeah.
It's brutal.
And you could do it from your home and having coffee and in your underwear.
Maybe you could, I wouldn't know what to do with this stuff.
Yeah, we'll get started. Yeah, could you please introduce yourselves with your auditors?
Which one is this, Mike?
Fire.
Fire. Oh.
My name is Albert Connolly. I'm the Director of Administration, New York City Fire Pension Fund. We have Maureen Dale. And Maureen Dale is our Chief Financial Officer, and Michael Sohn is our Chief of Staff.
Fire.
And Simone Sawak is our Budget Director.
Fire department.
Moved from O&B.
Good morning, all. Maureen Dale, Chief Accountant, reporting on New York City Fire Pension Funds, combining financial statements for the Fire QPP pension plan and the firefighters and fire officers variable supplements funds. Fiscal 19 was a year of growth and improvement. As you're aware, a significant source of revenues are portfolio returns. The return on investments for the QPP was 7.1% and 6.2% for the variable supplements funds. Our GASB 6768 report by the Office of the Actuary reported an improvement in our funded status. Fire's combined fiduciary net position as a percentage of total pension liability for fiscal 19 was 65.4%, an increase from the 64.4% reported in fiscal 18. We are encouraged by this improvement. Overall, our corpus grew by 7.3% over fiscal 2018. We began fiscal 19 with combined net position restricted for benefits of $14.1 billion and closed with approximately $15.2 billion. Individually, Fire QPP's net position restricted for benefits increased by 8.1% to $14.3 billion. The VSFs, however, fell back. Firefighters VSF fell by 5.8%, closing at $499.3 million, while the fire officers fell by 1.2%, closing at $342.4 million. Combined overall, the fund's net position restricted for benefits increased by 7.3%. From the combined statement of changes in net assets, we reported total additions of approximately $2.5 billion for fiscal 2019. Of significance in this group, there was $1.4 billion in employer contributions, which was 16% higher than contributions in the previous year. Also, Fire's combined net investment income was $982.3 million, due mainly to a $693.1 million net appreciation in fair values of invested assets. Combined benefit payments and withdrawals and administrative expenses totaled $1.5 billion, an increase of 5% over payments in fiscal 18. These payments included VSF payments of $44.7 million to firefighters, $24.7 million to fire officers, and $9.8 million in administrative expenses. On the membership side, fire processed over 480 retirement applications for members who now receive 90% of their benefits pending final calculations. We also processed new member applications for approximately 550 probationary firefighters who are now members of the fund, contributing under Tier 3 enhanced legislation. Fire closed fiscal 19 with over 11,200 in active members and over 17,300 in retirees and beneficiaries. Our results were encouraging.
Are there any questions regarding the financials?
The same question I had with the others. I have one other for you. In the public company arena here, when you get a financial statement, it says there are no events subsequent to the, you know that little sentence.
Yeah.
Why aren't they in any of these? Is there a different rule here? Yeah. It's in none of your opinions.
It is in none of your footnotes.
None of the footnotes, and every public company has it.
And nonprofit too.
Yeah, yeah. So is there a reason why it shouldn't be here? Well, you might think about adding that to all of them.
Just to add to that conversation, the subsequent event footnote that you're referring to, Mark, is a requirement under FASB reporting guidelines. It's not a specific reporting requirement under GASB. You can certainly add it in there, but it's not required. Yeah.
It isn't there, and I'm accustomed to seeing it. Now, the other question I had, Mike, is what's taking you so long to react to some of the comments that the auditors have? Everyone is
You're on the
wrong.
management letter?
I'm sorry, Mike, in the management letter. Everything is long.
Well, we were in the middle of, we got corpus funding a few years ago, and we actually were still at the fire, in the fire department at Metrotech. So we recently, last year, in February, we moved to our own location. And since we got location now, we have room to hire more people. So we've been hiring people. It goes through with our IT. A lot of the questions are IT.
Yeah.
So the IT, we actually are going to start interviews very soon on our IT director and the staffing for the IT. So that's why a lot of that IT things are.
A lot of it's outmoded, clearly.
But like I said, we didn't have the space to hire anybody in our previous location. So we're trying to move ahead as quick as possible. We just got on our personnel director. Fire was actually still helping us. We were paying fire to do some of our personnel, and we didn't know. So we've been going through. So the IT stuff should be taken care of. And a lot of also our computer systems, we rely on fire. We pay fire to administrator, administrate that. And a lot of things are, if you notice, are going to be implemented with fiscal year 2020, in the first quarter, second quarter 2020. So hopefully next year they won't be there.
Do you talk to the other funds about best practices?
Periodically, especially since we're new on corpus funding. So if we need to look at something, we've been, especially police, because they are at the other fund that got the new corpus funding. And we're so closely related in the laws and practices, so.
I would just reiterate at the end, as we went through all these, again, what I started with as far as the management system, they're all at different stages, and it would be really helpful if the auditors could provide us some guidance going forward.
If there are no other questions, thank you for coming this morning.
Okay.
Next up on the agenda is the OPEB plan. Raymond, going to the other side of the table.
Now we get down to real money, right? It's a staggering number, isn't it? Hey, wait a minute, there's a conflict of interest there.
Simone.
Good, good.
It's a wonderful village.
You're not going to listen to him?
I represent the one outsider on this panel.
Okay, we'll tell her.
Yeah. Well, on the other hand, you don't want to. I understand. But you gotta be prepared to ask the questions.
Is this on? Ah, yes.
Good morning. Could you please introduce yourselves and your auditors?
Good morning. I'm Raymond Lee. I'm the Assistant Director of Accounting Services at OMB, in charge of preparing the OPEB financial statements. To my right is Andrew Dowling, the Assistant Director for Miscellaneous Budget at OMB. Our auditors, Mark Spaneth, Hope and Talia behind us, and then the Office of Actuary and Office Controller, Bureau of Asset Management. So in 2019, as you probably noticed, the OPEB plan was fairly steady year over year. There was an overall decrease in the plan's asset of $67 million. Most of this is attributable to increases in benefit expenses, and in 2019, the city did not put a prepayment for 2020 expenses that they did in previous years. They still put up the $100 million discretionary contribution, which is consistent with the prior two fiscal years. In terms of additions, the investment income was significantly higher than previous years. Per Mark's comments last year, we broke out the realized and unrealized gains, so you can see the difference between the two.
Okay.
In terms of the OPEB liability, that has gone up roughly around $9.2 billion compared to 2018. It's been going up quite a bit. Also, the interest rate that's being used has been decreasing, which is also causing part of the increase. That's really it in terms of financial summary. I'll open up to any questions.
When do the rating agencies finally open their eyes about this?
I think they've always been aware of it, and even before.
I said open their eyes. All right, let me get down to some stuff here.
Yeah, unfortunately, that question goes back to when this was first created.
That's right.
And they said, yeah, we knew this all along.
Yeah, I remember asking you the question years ago.
Yeah, when I was on that side of the table.
Can I go, Mike?
Yes.
If you turn to page 15, the custodial risks, it says that the investment securities are exposed to custodial risk if the securities are uninsured and are not registered in the name of the trust. The securities are not insured for the purpose of custodial. What do you mean by insured? You talking about the risk of loss of the security, or the security goes down? It doesn't make sense here.
All right, we'll revisit that.
Yeah, but take a look at that. And then it says manages custodial credit risk by high-quality collateral. Well, the custodial risk is not only the collateral, it's that the custodian goes broke, and that's when you want the custodial risk, and that's when you want the securities in your name on its books, or something like that. So I don't. You might take a look at other descriptions of what this is, because it's not quite right. It's funny, you've got the biggest number and it's the shortest report. parlor games with people say, do you know what OPEB is? They don't know. And then I ask them to guess the amount, and nobody comes close.
It is a large number.
I think on the city's financial statements, it dwarfs the pension total pension number, right? In terms of the net. The net.
Well, it's bigger than the annual budget.
By a big margin.
Mm-hmm.
There's nothing to do with oh, my head.
Hearing no other questions, thank you for coming this morning. Andy.
Thank you, Andy, for coming.
Thank you.
We're going to take a short break and then go into an executive session, which will just be the members only.
Oh, we're done, huh?
Everybody's done. Last year, there's a comment on last year, and on that one, relative to you.
No, it's just good to know.
Before we take a break, I've been asked that, does the auditors have any comments that they want to make regarding the pension systems?
Hold on, guys. Thank you, Mike. Yes, I guess I did want to say, and thank you, Jackie, you realize we meet with each individual system board and go through our, what we call our PAP, our post-audit presentation, and we go through the comments, and they take those comments and digest them, ask some questions, and sometimes don't ask questions. So we do really appreciate the feedback that happens at this level. And just to say, from the time that we've been engaged to do this work, we really have seen a shift at each individual system become much more independent than they had in the past. With that said, so they function independently. With that said, though, there probably are, and it became clear through this meeting today, there are definitely some synergies that should be shared from system to system. Surely on the cybersecurity, we felt it, we understood that, and probably lessons learned through the systems process or any sort of implementation. Because each system operates independently, I don't know where that direction comes from, except to be able to say to each system individually how best to share best practices with one another and how others do different processes would be the best way. But again, we've come a very long way in terms of their own dependence with the controller's office, thank you. But yet there's probably some things that still should be shared. And things like Mark is bringing up, taking a look and seeing performance. I know BAM does that in terms of its investment, but just around processes. So from both, we heard from fire, and there are some synergies between police because of who they serve, but there are probably some other synergies all of the systems could benefit if they sat in the same room and talked their issues together. So we've had the luxury of having everybody in the same room from a timing perspective, and that has typically happened in June before we begin our work. But when it comes to timing and how we get the audit done, but I don't think they share each other's practices more openly, and probably should.
Would it compromise your independence if you ran a conference of all of these organizations you would audit in which you discuss best practices?
It wouldn't in any way tarnish our independence.
Maybe you could encourage the controller's office and the two of you get a conference of inviting these people to talk about the common interests and how to help each other perform better and to avoid getting tortured by us.
It's interesting, even, I took a look at some of the footnotes, and again, trying the first year we were engaged to do this work, we really have come a very long way in terms of the language in these footnotes and tried to mirror each system. But again, they work independently. They take ownership for those financials. So certain things we have suggested might not have necessarily transcended into final financials. But at least we got the font size all the same, right? So I'm saying that tongue in cheek. But it has been a bit of a
Still
struggle.
haven't capitalized the Ts constantly in the city.
We are pretty sensitive. No, you found some?
Oh, my God.
We are very sensitive to that edit.
I've
but,
given up calling it to your attention.
No, we definitely are. But, and I hear you loud and clear in terms of tracking the progress at the system level. We can share with you the flow charts that have been put together, and they are quite extensive on the flow of the information at each individual. You don't get, that's our work papers, you don't get to see that. You can, but a lot of effort and time went into that as we were trying to understand the different systems. If you even remember in the beginning of us, our first year, they were literally bicycling paper to and from, messaging, so that no longer happens. But again, we hear you in terms of these, what could be those shared practices, and there probably are some, as I mentioned, and probably a lot more that can be shared amongst the systems. We did start, and that's where I was going, with the June meeting, we do open it up to start the conversation about how best to make the timing work for everyone and what one system may do differently than another. I hate to use the term Sally, same as last year, but I think people are conditioned to perform a certain way. We all get it done in the end, but there are probably easier ways to get process done to meet the deadlines, So you should know also that we have not yet met with the Board of Education's board. The day of our meeting in December, there was a snow scare and it got canceled. So we are scheduled to meet with them January 29th. Okay.
I didn't know that the Board of Education disappeared when the mayor put it into the city. So
Became the Department of Ed.
Department of Ed, pardon me, Department of Ed, sorry.
There's still some
I'm thinking,
references
yeah.
in some of the paper to the Department of,
Yeah.
the Board of Ed.
Board of Ed, Department.
I forgot to ask each one individually, but I assume they all submitted their CAFRs?
Yes, yes, we've gone through that process,
Okay.
yep, with them.
Thank you for
Okay,
your
thank you.
comments.
Thank you.
We'll take a 5-minute break, and then we're going to go into executive session. Of the Audit Committee, so if there's no other business, I have a motion to adjourn.
I second.
Thank you. You, Jack?